who are my partners? What is my process? Such that when this model is smarter next year than it was last year, I will be better off for it, not worse off for it.
Hi, everyone. Welcome to Housing Insiders, the podcast for founders, builders, lenders, and regulators, and anyone who believes that everyone should be well housed. I am Jonathan Lawless.
And I'm Jeremy Potter. On Housing Insiders, we're hosting the conversations you won't hear anywhere else about how to make housing more innovative and attainable.
And again, we're proud to partner with Built Rewards, who's sponsoring these smart conversations. If you have an idea for a guest or a show or would like to sponsor an episode, please email us at podcast@thehousinginsiders.com.
And if you like the show, please give us a review. We ask because it's important. It helps us spread the word, get the podcast out there so that we can keep making more.
To start off today's episode, I think rates have kind of come to about 6.7%. So there's some green shoots. I think we're starting to see some origination volume pick up a little bit, certainly in the purchase market. Don't know if we're seeing anything really exciting in the refi space, but things are starting to pick up. And people are starting to think, maybe rates are going to get a little lower. Now, like we talked about last week, maybe they're going to get a lot higher. I think given that origination volume is up, and I mean, it's always going to be strong every year because people do have to buy houses. There's a lot of opportunities for companies like Vesta. There's a recent article in Fortune that features some great news about Vesta, really a mortgage infrastructure startup getting some love by venture capitalists right now. Mike Yu is the CEO, co-founder of Vesta. So they're, provider of mortgage loan origination software. We'll get into a lot more. He knows a thing or two about applying tech to the mortgage industry. Before Vesta, Mike was an advisor to Blend, a company that many of us know. He has a master's degree in computer science and AI from Stanford, which is obviously useful in what he's doing. Mike, welcome to Housing Insiders.
Yeah, thanks for having me.
Mike, I'm really looking forward to this conversation. We talk a lot in this industry, but also you and I talk a lot about the technology sophistication or lack thereof in the mortgage space. It gets a lot of attention. It also gets a lot of criticism. I'm just wondering if you feel like when we talk about mortgage companies, technology, adoption, lack of adoption, is it a fair criticism to say that this industry lacks technology sophistication?
Well, I think there's a lot of nuance to that criticism, right? Like, I certainly don't think that I would say that people lack technology sophistication. I think that people have overwhelmingly been smart and interested and always trying to learn, the newest, the cutting edge. Where you run into problems is, I think, structurally the companies are in a place where they are unable to invest. And that's, a whole variety of conflating factors, but that includes, the industry is cyclical. And so the industry is cyclical. The joke is always you either have no money or you have no time to do any long-term projects. There are very few mortgage lenders that plan, in a time span of more than like, what's it going to look like 5 years from now? What's it going to look like a decade from now? And it's actually very hard to make technology investments if you're not thinking about, you don't have a vision for what you want your company to look like at least 3-5 years down the road. And so while I would never say that like the people of mortgage lack technology sophistication, I certainly think the companies have been slow to adopt and slow to innovate. And a lot of that is just, the structure of the market that we find ourselves playing in.
We have seen a lot of innovation on the part of startups trying to solve for unique, bespoke challenges. I'm actually kind of curious to get your perspective in terms of how do you solve the technology problems in this industry? Do you solve it by trying to get everything in one fell swoop, one technological solution? Or is it piece everything together? Because again, I see, there's not a single mortgage conference I go to in which there are not more vendors than there are mortgage lenders, which is always fascinating. So there's a lot happening out there. So I'm just curious to get your view. Do you bring them together or do you try to replace them?
Look, the industry is really, really complicated. And so I think of it less as a strategic question of like, do it in a bunch of pieces or do you do it in one fell swoop? And it's much more just like solving one problem at a time in the right way, in a way that a lender understands, in a way that they can adopt it. And the reality is when you look at the number of problems that lenders have from like the front of the process where you have to find the consumer and market to them and figure out how to compete with the banks and the Zillows and the Redfins of the world, all the way down to, selling that loan on secondary markets and everything that happens in between, I think the reality is there's just a lot of problems. And so, lots of companies say, hey, we're going to go do it in one fell swoop. And I think that the problem is that in practice, many of those companies that are trying to do it in one fell swoop, they end up spreading themselves like a mile wide and an inch deep, and they actually solve none of the problems. And so to me, it's less like a strategic question of like, oh, is it better to do it all or is it better to partner? And it's much more of like, what can you, from an execution basis, working forwards from your capacity, actually figure out how to solve? What are the problems that your team can bite off today? I'll be honest, I have lenders asking me, like Vesta's customers ask me probably every week, will you build me this solution? Will you build me that solution? I don't like this vendor. Will you replace it? Will you build that vendor? And they're always like, why can't you build these things? And the answer is we can build these things. But we also have, 27 people on the engineering team. We've got a constellation of great partners. Is it worth it for us to go and take 10 of those people and go say, hey, we're going to go build a pricing engine. Hey, we're going to go build a docs engine. Hey, we're going to go build a point of sale. The answer is generally it's not worth it. I think of it less as like hey, I think it would be better in a world of unlimited, engineers and resources for one company to say, we're going to build everything and we're going to build everything a mile deep and a mile wide. We're going to solve all your problems. It's all going to be in one place. That all makes perfect sense. At the same time, like, will anybody ever actually be able to execute on that? I'm skeptical.
Yep. Could you maybe just to lay some a foundation for the conversation, tell me where Vesta plays exactly? Like where does Vesta start and end in terms of the solution you provide today?
We've built a loan origination system. So, kind of the end to end, we do not have anything borrower facing. So, it's really from the moment the loan officer takes in the application, if they're keying it in directly into the LOS or whatnot, all the way through to, closing, post closing, and interim servicing. We are the system of record that kind of plugs into everything else that all of the users are working inside of, et cetera. But importantly, we don't actually do all of the, I would say we partner on a few key components. We partner on compliance and documents. So, when it comes to solving for 3,000 plus counties and 50 states of regulation. We've got really reliable, strong partners who we integrate with for that. We partner on the pricing engine front. So when it comes to interfacing with all these investors, we partner on the data front. So whether it be, the core logics or the data verifies of the world, all these different data providers, we partner with those. And of course, we partner with the consumer front ends as we don't have one. But we're kind of the core underlying platform and the backbone. And then, that's why many customers ask us, hey, can you just build all these other things that are on top of your platform? But the answer is there's so much stuff there. And there's frankly so much work still to do in the core backbone and the workflow and automation layer that I really believe that you've got to pick your battles. And so that's where our partnership approach comes from.
Yeah, it sounds like as you talk about the backbone, you're really talking about a new way of thinking about partnership, to be honest, the glue for that process, because I think the competitive landscape, for lack of a better way to put that, the establishment technology was much more robust in terms of stay inside and do this, stay inside and do this. And in fact, when I first started in this industry, Mike, it was the LOS is also going to give me my standard operating procedure. I don't have a standard operating procedure. It's whatever my LOS is becomes my standard operating procedure. And I change my business accordingly. And what you're kind of saying is that's actually not the way you've looked at Vesta. Am I articulating that properly? And if so, does that change the type of technology you're building from an LOS perspective or from a backbone, of the process perspective?
Yeah, I mean, I think that that's definitely true. I mean, I'll be honest, I think that there's also just a dose of healthy humility there, which is I look at my team and what we've been able to build and who we are. And frankly, I think we're really, really freaking good at building technology. And I think that lenders buy that story. I sit down to have coffee with a lender or whatever, and they're like, this guy probably knows how to build tech. They're also, none of these people are like, this guy's going to tell me how to run my operation. Like, precisely zero of them, right? And so there's also, I think, the reality of lenders, mortgage lenders especially the scaled ones, they're becoming more and more opinionated about how they want to run their operation. Like for them, many of the core platforms they're using the LOS, it's working against them. It's not working for them. Because to your point, Jeremy, the LOS comes with kind of like an opinion on how you're supposed to do the work. And that opinion is very rigid. We also come with an opinion, but I would say our opinion is really more around what are the primitives of the type of work you might need to do? What are the types of tasks you might want to do? What are the types of ways you might want to route that work? How do you think about dividing work in parallel versus in sequence? But it's much more about the primitives. And then lenders really are designing their own SOPs and workflows. And of course, we've got a whole implementations arm. We do a whole bunch of consulting with lenders. We're happy to bring our point of view. But I think we've found over and over that, frankly, operations people at lenders don't necessarily like being told what to do by their technology vendor. And they extra don't like being told what to do by their technology vendor when it's a team that often comes, predominantly from outside mortgage.
Yeah, that's a real tension. I think you hit it, and the meaning the tension being, I know that I know this business and I want to run it a particular way, but I honestly sometimes don't know what I'm capable or what partners are capable of what. And so what I'm really intrigued by is like when I sat down at Stavvy and looked across what it takes to close a loan, your point earlier was the right one. It takes somewhere in the neighborhood, not scientific, between 40 and 70 integrations at some places, not all, but at some places. And that in part is unsustainable because you can't, to John's point earlier, have just one thing that does one minor piece 17 times. But at the same time, no one solution is going to do all those tasks, all those capabilities at the highest level. And you've described something kind of unlocked it for me just now, which was like it has to be a balance. And it's sometimes hard to describe that a balance is the right way and that moderation from a little bit of both camps is the right way. But you're saying, hey, nobody's going to build it all, but you can't rely entirely on point solutions either. You have to have this mix and you have to articulate your view of your business. Certainly that's where differentiation happens, but I think that's also where the complexity happens for what we're talking about.
Yeah, and I like what you said about a balance. I think, you and I have had this conversation a bunch, but I really think that there is a tendency in this business, in most businesses, to like over intellectualize and try and find like this is what we think the right answer should be. Should it be all in one or should it be, a constellation of points providers? And I think, and very similarly, it's like, should the LOS tell you what to do or should the lender decide what to do? And I'll tell you with each of our customers, it's neither A nor B, right? Like each customer is a unique conversation where we come on site, we bring, the implementations team, we bring what we see as best practices, consulting, we are helping them think about it in a different way. They also have their own sales process, their own, unique stakeholders and their own unique, super powerful branch manager who wants things done a certain way. And so every lender is going to be a little bit different. And the reality is like this thing doesn't have to scale infinitely. Like I don't have to be able to turn on the next lender, like lender number 1 million with like a snap of my fingers and like just have the right solution build itself for them. There are only, a few hundred lenders that do more than 100 loans a month in this industry. And so it turns out one of the nice things about the industry is you can actually solve for each person and each lender as a real partner, kind of hand in hand with them. And so I always tell my team, like, you don't have to over intellectualize. It doesn't have to be infinitely scalable. Just make it work for every single customer, then make it work for every single prospect. And then eventually you can make it work for every single lender. And that's still not that big a number.
I love it. And I love when you talk about your team. Just random fact, my brother-in-law works for you, John Holmer out of Ohio. And so in any case, I appreciate you taking care of my family. Sound like Tony Soprano. I'm not an expert in sort of how these technologies work, but I do know that there, you've got Blend out there. I guess it has Encompass, a sort of the huge, all of them sort of touching a different part. And it's kind of an interesting time in the industry. Anyway, what was your thinking of kind of entering into this market? And based on kind of how you just described it, like what type of lenders are you finding that are adopting your technology? Kind of what's your sales pitch to convince them to not use some of the bigger incumbent solutions that are out there?
Yeah, I mean, for us, it really is all about operational efficiency. I think that, when we look at what we were looking at Blend, there were a lot of asks from Blend around, hey, we're doing day one certainty with Fannie. We're figuring out a lot of these verified data stories. There's a lot of exciting stuff in OCR. Like, what does it look like to actually drive real operational processing, underwriting, closing ROI in this industry? And those are just the jobs that honestly, I think for decades, people in this industry have looked at those jobs and been like, yes, there is an important human component, but also a lot of what they're doing is rote, mundane, and can be automated with technology. And yet here we are in 2025, and a lot of it that hasn't been done. And so at Blend, we would get this ask a lot. And I think we really spent a lot of time thinking about why we weren't, able to really take work off of those people. And the conclusion that we came to, that I and my co-founder Devin came to, was really the problem was that even if you automated everything, it wasn't a problem with the technology. It wasn't a problem with the technology's ability to automate stuff. The problem was even if you automated everything, you had a change management problem, which is people were working in the old system they'd been in for, decades. They were doing things the way they were used to doing them for decades. They had muscle memory around the things that they did, or they had, a 200-page PDF that was their underwriting manual that told them what to do. They had sticky notes taped at their monitor, whatever it was. There was this whole ecosystem of like, I do the work manually and I know how to do it because I just know how to do it. Our point of view really became, hey, if you really want to drive efficiency, drive up quality, drive down cost, you actually have to fundamentally change the way that these people approach their jobs, which is you have to say, they're going to do what the system orchestrates. And therefore, if you automate a piece of that rote work, you can take that away from them. If someone does it upstream and they do it well, or they've proven that they have a history of doing it well, you don't need your closer to look at it again, right? And so it's really like, it became, how do you like project manage the loan was really what we zeroed in on as the problem. And so at Vesta, really the core focus is, how do you implement an LOS, a backbone inside of these lenders, such that the system is driving the loan and telling people what they need to do, when they need to do it, in many cases, like guiding them through how to do the work. And most importantly, making sure you're not creating like extraneous work that doesn't need to be done. And so that tends to be the efficiency sale. I'll be honest, I think ever since Rocket went public in like 2018 or 19, people have been talking about task-based workflow in this industry left, right, and center. Very few of them have been able to actually implement it. And that's because if you actually look at how the LOSs are architected, which we'll get into in a second, it's not really possible. So for us, it was, how do we bring task-based workflow to lenders? Well, that's kind of like the short way to think of it. And then you actually have to ask yourself, all right, can I build this thing on top of an existing LOS? And the reality is, if you can build it on top of an existing LOS, you 100% should. Like, why on earth would you do the brain damage of building the whole LOS, making the lender switch, et cetera, if you can do task-based on top of it? But if you actually go all the way down to the database layer, like all the way down the architecture of the stack, we concluded that there were two limitations that made it unrealistic for like kind of task-based, an automation-first approach, a data-driven approach to exist inside of the dominant LOSs. The first problem was, the database architecture is basically, it's a single flat file with a lock. And so when we talk about having one person in the file at a time, that is a database limitation, like all the way down to the database level. And so if you don't re-architect the LOS, you cannot get around that problem. So a lot of the core ideas of task-based workflow and automation are like, I can have an automation running while I've got somebody in the load. I can have the borrower looking at something and the LO looking at the same time. I can have, someone reviewing income and someone reviewing the appraisal in two totally separate spheres of the world in parallel. And all of that stuff kind of is prohibited by the existing LOS architecture. So that's problem number one, was like the database architecture around single file lock. And then the second problem was very similar, which was, we looked at the way that the LOSs, thought about modeling the data. And the reality is, these things were all just built so long ago that the data model is mostly a flat data model. And what that means is that you don't have these relationships between the various objects on the loan. You have like one loan that may have two borrowers, and those two borrowers may each have two incomes. And like, when I describe it that way, you think of like a tree, probably is like logically the way you like graph out the world. And those relationships are actually really critical if you want the system to gain like a rich understanding of what's on the loan. And you want, in the future, some AI, for example, to be able to actually synthesize the data on the loan and make sense of it. Like, having that structure in the data is key. And none of that exists in the incumbent LOSs either. Like, it's all super flat. Anyone who's made a custom field tells you they have to make like a separate custom field for borrower one and borrower two. And so those two core architecture constraints, we looked at those and we were like, you can't build the right workflow system that's going to drive this new way of doing workflow and parallel and automation on top of the existing LOSs. You have to start over. You have to redesign the database layer. And that's kind of how we ended up here.
That's fascinating. I love that. What a great description. Man, I could listen to that for a long time. That was really, really insightful. Let's take a quick break to hear from our sponsor, and then we will come right back and continue the conversation. This episode is brought to you by Built Rewards. Built is a rewards program, just like an airline program that is centered around your home and neighborhood. But instead of earning miles for flying, Built rewards you for paying rent, no matter how you pay. As a member, you can earn points at over 20,000 local restaurants, local merchants, and those points are now the most valuable rewards currency. You can use it to book travel, on Amazon, or even towards a down payment.
Built is revolutionizing housing. If you want to learn more, email John at lawless@builtrewards.com.
Welcome back. We're talking to Mike Yu, co-founder and CEO of Vesta. And Mike, to be honest, you said the magic word, the word that's on the minds of probably everybody that listens to Housing Insiders, because their business is being challenged by it or they're being asked about it all the time, and that's AI. And you said, you have to start to think about how you work with technology partners who can then evolve to use data in new ways as AI evolves. And I think we would all appreciate your technology background and perspective and expertise. You've been a vocal advocate that technology is a game changer, and specifically AI is a game changer. So I kind of just want to open it up based on your comment a second ago. What does that mean? And what do we think this technology is really capable of for the housing industry, for the mortgage industry?
Well, it means a lot. Maybe just starting with what we think it's capable of. I will warn you, like I have been AI pilled. Like I think that in 20 years, AI will take your job, my job, like everybody's jobs. And I think as long as society we are adapting to that continuously, and it's a slow rollout, like 20 years, we will all be much better for it. Now, if it happens in the next 2 years, I think we're all screwed because society doesn't know how to handle that kind of uplift. But and I think it's good also when we talk about lenders. There's so much like mythology around AI. We should get precise about what we're talking about, which is where I think there's going to be a lot of unbelievable value. Is we have realized or re-remembered or whatever, however you want to study the history of AI, that bigger is better. What I mean by that is like it turns out that if you spend 10 times as much money training a model with 10 times as much data, 10 times as many GPUs, all that good stuff, the model is smarter than if you had one times. And so what that means is that kicked off this arms race, right? You've got OpenAI, you've got Anthropic, you've got Grok now, which is its own funny thing. You've got Google, you've got Meta, you've got everybody kind of figuring out how do we build the biggest model. And the beneficiary is going to be all of us. It's going to be all of these industries. But the way that I think of it is you will basically have access to intelligence on tap. And that means that the set of things that a computer can do will be significantly more robust than it was 2 years ago today. And it will be even more robust 2 years from now. And that's just going to continue until, like I said, in 20 years, it's going to take all of our jobs. What does that mean very concretely? I think that's like people have to figure out how they are going to start supplementing human labor with AI. Whether that's I'm going to have agents do some of the most mundane tasks my processors do. Maybe the best micro example for mortgage is OCR. We've been working on OCR for like 20 years as an industry. It's like people have raised like tens of millions of dollars to like get a whole treasure trove of purchase contracts, and like then you go get installed at Bank of America and you teach them how to use your template analyzer to like set up their 10,000 purchase contracts and how exactly you take the data off and all of this like crazy asinine stuff that we've been doing. And then it turns out if you just take a purchase contract today, and like I would encourage people to just try this at home, give it to ChatGPT and ask for like the 10 fields you want, it will pull them off. And it'll pull them off way more accurately than whatever these other people were doing before, using their, OCR technology and templates and all this like stuff that they train specifically for the mortgage industry. And so like the meta lesson in that is almost like if you just spend way more money, but you try to solve a general problem instead of trying to solve the specific problems of like solving each mortgage stock specifically, you get better outcomes. And that's really, I would say, what ChatGPT reminded everybody of. That's what the big lesson in AI has been over the last couple of years. And to be honest, this is a lesson that like people learned in like the 90s, and you forget this is a cycle. You like forget that that's the lesson. You go try to outsmart scale. You go try to figure out all these clever algorithm optimizations, and then scale still wins. But I think that now we've kicked off kind of this crazy arms race, and so scale will be amazing. And so much of it is I actually question when people say, hey, it's about building a proprietary data set. Because I'm like, the proprietary data set is the same thing as having the 10,000 purchase contracts you were training your purchase contract reader on. And so much of it, it's not going to be about how do I build the best AI myself? How do I own the intelligence? How do I do this thing? It's how do you position your business so that as intelligence gets better and better and better, and the OpenAIs and Anthropics and whoever of the world continue to ship smarter and smarter models, that you are benefiting from that, and that's a tailwind for your business and a tailwind for your mortgage experience. It's a tailwind for your operations. It's a tailwind for everything that you're doing, as opposed to a headwind where it's like commoditizing stuff that you spent a lot of energy investing in. And so that's kind of like my long AI soapbox. I would say the gist is really like if I were a lender, the one thing I'd be thinking about is who are my partners? What is my stack? What is my process? Such that when this model is smarter next year than it was last year, I will be better off for it, not worse off for it.
I love that. I always find it reassuring when somebody who's really smart and knows this stuff well kind of says something that I've been sort of feeling instinctively about this area. And I guess the one question I have today is what parts of the mortgage process still where AI is today, to me it's mind blowing. Where do we still even need humans? Because again, I like inputting data, taking that data and putting it into a GSE AUS and getting back a set of conditions, figuring out what kind of documents you need and ask, like it just feels to me like already today AI is good enough to effectively replace all humans in the process. I mean, you must be thinking this sitting where you sit, like do you think we like who's going to get there first, I guess is really the question.
There's a handful of things you just said, right? One is like, all right, so when I look at the actual tasks to be done, can AI do it better? You can have some debate, but for the most part, I would agree with you. But then there's also just looking at how important housing is, looking at how important mortgage is, looking at the political sensitivity and the government sensitivity and the way it's regulated, the answer is like, I also promise you, cars are better at driving than humans are. Like to a T, every single human, I don't care how good you think you are, like I pay a premium to get in a Waymo because I am sure that cars are better than humans at driving. And yet, how many self-driving cars do you actually have on the road in this country relative to how many humans are driving? And by the way, like you want to talk about like actual real, like, oh, you would save dollars if you implemented this, lenders should implement this tomorrow, etc. We would save thousands and thousands of lives if we had a self-driving car, like if we didn't let humans drive anymore, basically. And
Yep.
yet people still drive. And so from a capability curve, I don't think AI has to get that much better to be able to do a lot of this work. But I think there are, of course, there's the political and regulatory sensitivities around mortgage that will make it take a much longer time before you actually can say, hey, I've fully automated the whole thing. And I will say that I would be very surprised, to be honest, if we ever got to a place where we felt like the AI was the thing making the credit decision in a total black box. Like, I've always told the team that the path forward is, hey, there are a bunch of rules that tell you whether you can get a mortgage. There's a bunch of data that those rules kind of run over and they tell you whether that loan qualifies. Our job is to figure out how to get the data into one place and the rules into one place and get those structured in a way that I can just run them through no AI, just like a super traditional rules engine, spit out the output, fully auditable, and hand that to the GSE. And I think if you can get there, then you've already automated a lot of the process. Like you didn't need AI for a lot of this. The problem is that today the data is all unstructured, right? It comes in like a bunch of PDFs and it comes in, the borrower is sending you pictures of their driver's license and it comes from all these different sources. And the rules are unstructured too. It's like some underwriter memorized the Fannie Mae selling guide and like they're taking those unstructured rules and putting those on the unstructured data of the docs. And so actually structuring all of that work it's a pretty big problem. It's a lot of work. And then that's a place where I think AI can accelerate you a lot today. It's like how do you read the documents? How do you turn the rules into code? Both of which, of course, we're investing a lot in at Vesta. And then if you run a rules engine, that's in my mind how you circumvent like the self-driving car problem. And then at the end of the day, you're going to need people for a few things. You're going to need someone to talk to the customer because people are still going to want that, at least for the next. I'm not as bullish on like people will always want that, but I would say for the next decade, people are going to want that. I think that people are like way too confident about what they think will happen in like 2 decades. Like I have no idea. But I would say like maybe for the next 5, 10 years, people will definitely want to talk to somebody. You'll still need a licensed human being to sign the underwriting decision in a lot of cases, right? Like FHA is probably not going away in the next 5 to 10 years. There are a few key places where you're still going to need a person, but I think you're right. Like most of the job can be done by technology today. And then the question is like, it's less, is the technology good enough? And what is the change management? What is the adoption curve?
Mm-hmm. It's great.
If we were to march down the path that is, pretty effective, like you said, pretty good about thinking about these things, pretty good about adopting these things, and definitely cutting out a lot of waste and inefficiency. One of the things that comes up that John and I talk about a lot is like, and then how does it change the cost or the rate that the actual consumer sees? Do you know if you've developed a theory yet on like, does all of that, which will certainly benefit the lender's bottom line, also translate somehow in that same amount of time to truly making it to the consumer's pocket? Or are we really just talking about manufacturing costs?
I think there is a lot of noise between what the lender actually is going to pay for manufacturing and what the consumer gets in the form of a rate. And I think like my most obvious example is sometimes I talk to distributed retail lenders and I'm like, we can take $2,000 out of your manufacturing process. Like we've looked at it, we've looked at forward, sideways, backwards. Like it looks like we can take $2,000 off. And I know what you're going to do is you're going to turn around and say, great, I can pay the loan officers $2,000 more so I can go get the guy across the street now. In which case, I will tell you, it's not going to help the consumer cost. And then you have some other problems, right? Which are like, all right, so if I can make it much cheaper to do the purchase loan, what does that actually do? Even if you could reduce purchase rates by an eighth, like across the board, what does that do to home prices? Because now everyone's just bidding with a slightly better rate. And then people are like, well, at least you could make refi much cheaper. And then refi would be instant and everyone would refi every time rates dropped 50 bips. And then my question is, okay, and you don't think like the capital markets, the buyers of MBS are not going to demand like a slightly steeper spread in exchange for that? So
For sure.
my answer is like, there are so many things that go into mortgage rates and prices, and I think it's mostly financial engineering. Look, I think that you can definitely create net new value for the world by saying, hey, this thing that we used to have to pay people to do, like they don't have to do it anymore. Where does that value accrue in this like very complex financial ecosystem? I'm skeptical, to be honest, that it's like I'll be able to say like, hey, a large percentage of this or the majority of this is going straight to the consumer's bottom line. Like there's just so many places it can end up. Sellers' pockets, loan officers' pockets. And I think it's really hard to predict.
Yeah, just one thing that Jeremy has said in a very early episode, which I've been repeating oftentimes, is that when you buy a home, you're working with 6 licensed professionals: 2 realtors, a loan officer, an inspector, an appraiser, and a title agent. That's a lot of people have gotten involved in this business because there was a lot of the pie to cut up and eat. And I think if you really want to save people money, there's got to be less people at the dinner table. If technology is there, it's just going to continue to support the efficiency of the people that are eating from the pie. I mean, I kind of agree with you on that, but it sort of had me thinking a little bit like, if I were starting a mortgage shop, which it just turns out that I kind of am in that position right now, trying to think through how I would do this. And I was starting with the advantage of AI. Could I make the process significantly better than any other lender does today? Because I'm starting with this radical new position. And I think the answer is yes. But I also think the answer is even more impressive if I'm starting with the idea of, I also want to start a mortgage brokerage, a title agency, an appraisal company, an inspection agency. And if I could do all of those with the benefit of knowing I would just rethink the whole process end to end and make it much, much cheaper. And in that case, I think see a significant decrease to the consumer's costs while not losing a lot of profitability on my own. But anyway,
See, but
sorry, I'm
but now
rambling.
we're back in this over intellectualizing land, right? Which is like every single prop tech under the sun has had this idea, which is like you look at Open Door, they had digital Open Door insurance services, and they had a mortgage arm, and they had a title company, and they were selling the house. And you look at Zillow and their super app, and you look at Blend, we built an insurance business, we acquired Title 365. Like everybody has this idea, which is there are 6 licensed professionals. How do I put them all in my roof? How do I say, great, I pay one time to acquire the consumer, I can monetize them 6 ways? And it turns out that each of those businesses are really, really hard. So everybody who has tried to do like the all in one, like we're going to build all 6 of those businesses, they build one of those 6 normally really well and 5 really mediocre businesses is like typically what you see over and over and over again. And
100%.
so I agree with you, but at the same time, it's like if you ask me, like, "Hey, how do you take cost out of it for the home buyer?" Like, there is only one answer in my mind, and that's like all of these middlemen, all of this financial engineering, all of this stuff happens because demand for houses is actually pretty inelastic in price relative to other things, and supply in the short term is very
100%.
inelastic. And so if it's like, how do you reduce the price to the home buyer? The only answer is build more houses. Like
I
everything
I
else is
agree
just
with
a
that.
function of like we're capped on houses, guys.
But Mike, back to your earlier point, and I agree with you. A lot of people have tried to put those things under the same roof, but the only thing I think is different is AI is going to radically make those businesses easier and more technology driven. And as that happens, is the opportunity of combining them. Does it look different than the landscapes looked in the past? And I don't know the answer. I mean, obviously, time will tell. But as these things digitize and become simpler, ostensibly with AI, they become more commoditized and more combinable.
I told you this at the beginning of this conversation. I am deeply AI pilled. Like I believe that AI is
Yeah,
like the
yeah,
most
yeah.
special
Me
time to
too.
be alive in technology in decades. I also think that the argument you just made, Jonathan, is an argument that they make with every technology wave. It's like, all right, now we have the cloud. Now I don't have to stand up my own servers. It's so much easier to build a technology business. I'll build these 6 technology businesses that used to be separate and put them together into one. Or it's like, now we have the internet. Now, you know what I'm saying? It's just like, there are
Yep,
still
yep, yep.
fundamentally hard
It's fair.
things about running each of these businesses. And does AI help? Absolutely. Is AI going to make it so much easier that now it's just like, you know, trivial to take all 6 and mash them together? Still skeptical.
Yep, yep. That's fair. That's fair.
Mike, thanks for being here. This has been a phenomenal conversation. We have a final question we'd like to pose for you. And our final question is, you're obviously focused on Vesta and building the backbone for the mortgage industry. What business, so taking aside, we know that's true, you can't build that. What business do you wish existed? And if you were talking to a potential founder who's listening to this episode and could go out and start that business tomorrow that doesn't exist today, what would it be? What would that business be?
I think I've talked to you about this, Jeremy, and I think this is like a business that I would start if Vesta was massively successful. And so it takes a certain kind of founder to do this because you have to be like very well capitalized, very good at raising money, all this kind of stuff. But I think a lot about what Elon did for electric cars. And I am convinced that there is a similar, not identical play to my build more houses point to be made in manufactured housing, which is like the electric car was like super unpopular. It was super unsexy. It was better for the environment and better in a whole bunch of ways. And yet nobody wanted them, And then what did Elon do? He went super high end. He built the designer electric car everyone wanted. He like has this incredible single-minded ability to like build the factories no one else can build these things at cost, make them super sexy. And to me, it's just like manufactured housing isn't exactly that set of problems. And so I don't know how on earth, by the way, like some first-time founder who's getting their idea from podcasts, which like, by the way, founders, don't ever get your startup idea from podcasts, but would be able to pull that off. But if you ask me, like, what is a company that like I would be excited about building as round two, or like what is a company that somebody out there who has got a lot of money on the sideline should build? Like, in my mind, there is a play to be made there, and I think that is really the only way that we're going to, make sure that everybody can be housed. Is you've got to figure out how
Amazing.
you're going to change the means of development, and then you're going to actually make that culturally sexy again.
It's
Right on.
amazing. Jeremy and I have talked about that often, the Tesla of home building and sort of what does that look like versus everyone kind of starts at building the cheapest home. And I think there is an opportunity and there's certainly obstacles, but I love that. I love that vision. It very much resonates with a lot of what we've talked about. Mike, it was awesome to meet you. Thank you so much for joining us. That does it for this episode. For the listeners out there, we'd love to hear from you. Send us an email at podcast@thehousinginsiders.com. If you like what you hear, please leave us a review.
Hit subscribe so that you get all of our episodes in your feed. And thank you, Keenan Chen, for our opening music.